So after all the great contributions of my colleagues that, smart, agile, young, running fintech companies, here's a representative of American Express, a company that is over 160 years old. So it makes me feel a little bit like a dinosaur, but bear with me. And I'm very happy to be here with you today and share a few thoughts on how we at American Express look at innovation in the payments business. So for those of you who still have strength in their arms and are not dying for the coffee that is up after myself, is hands up if today you either took out a mortgage or you insured your car or you sold some shares today. I guess there's nobody, right? Because usually these processes are so complicated that you probably wouldn't have time to be here if you had to see one of these transactions through. And I guess if I ask the question, who of you has done a payment? If you still had strength in your arms, all hands would go up because that is the one thing that touches us every day, right? Whether it was for coffee, whether it was for parking, your train ticket, maybe it was with cash, I hope not, your phone, or hopefully with your Amex card. But you all did go through this experience, which makes payments the financial service which touches people every day. 57 million transactions take place in Germany on an average on a day. On the EU level, that's 366 million and 1.2 billion on a global level. And we're therefore one of the sectors that is under the most pressure to innovate, to constantly listen to our customers, and to find ways to leverage technology to make their lives easier. So ultimately, I think, and I guess we all agree on this, that customer expectation will drive innovation, and in Germany, customers, whether that's consumers, businesses, merchants, are becoming more demanding. And to meet their expectations, the payments industry is going to have to innovate. So from our perspective, there are three big demands which the industry will have to work hard to meet. First of all, faster, safe, and more seamless payments, more personalized payments, and more value ultimately for the user, because that will drive choice. So as to faster and safer, more seamless payments, people expect frictionless payments, but still want to be protected. Frictionless payments are great from a customer experience perspective. Amazon one-click checkout, Uber, voice shopping, checkout-less grocery stores are shaping customer expectations, and demand for them will grow. For those of you who have the privilege of doing grocery shopping with children, the need for faster payments will resonate. That moment you're trying to get them out of the store, and every moment you spend at checkout, they find yet another thing that they want and they want to take with you. I'm a mother to 3 boys, and believe me, tapping a card, flashing my phone, or maybe one day just presenting my face or thumbprint makes my life better. And I think that it's that kind of experience consumers can get excited about. I mean, I'm certainly excited about that, as you probably noticed. However, the challenge of fraud remains, and Amex has the lowest fraud in the industry, and we work by controlling with AI and other frictionless systems that preserve the customer experience. So what do I mean by AI? Not the kind we see in the movies that invariably ends up taking over the world. No, rather more mundane but very effective type of machine learning, which analyzes transaction data in real time to come up with insights that humans miss, and to then use those insights to help it improve itself. A concrete example, it says I shouldn't trust someone that sends flowers with too much love. This is not a comment on our post-Tinder world, but rather an example of a fraud indicator it identified. So apparently fraudsters trying to process payments with florists tend to write more love in the message than real people do. So this can be picked up and fed in with a whole host of other data points, and now identify if a transaction should be allowed through, whether it should be flagged or it needs to be blocked. So that is just one of millions of insights which are constantly being tested and improved. and all in the background each time you use your card. And this gives you an idea of the power we will have to protect people going forward. These processes help Amex to have very low fraud rates, which again will help us when strong customer authentication comes into force later this year. However, it has been a bit disappointing that the two-factor authentication rules haven't been as future-facing as we might have hoped. People want to be protected, but they do not want to be interrupted. And I'm hopeful as an industry we'll manage that transition well, although I continue to hear concerns from many merchants. In Germany, we are, I think, good at innovating, even though we might not always package it up nicely. And we want to have the scope to do more of that. We should deliver fast, safe, and seamless payments, and not one or the other. Moving on to the demand for more personalized payments. So customers want more power over their financial data. And open banking will empower them. But as an industry, we'll have a collective responsibility to make sure they understand the risks. Big tech has got it wrong. It is not enough to say, don't be evil, but also don't be creepy. There is a high level of concern with how data is being used around the world, and GDPR, I think, was needed. Data privacy protection, a big theme in Germany, is the laws are stricter in Germany than anywhere else. However, 75% of the consumers still have concerns that their data might not be safe online. We still have 51% that are consciously not making use of certain online offers because they are skeptical about the safety of their data. At the same time, there is a demand and great opportunity for consumers and small businesses to get personalized insights based on their financial data. Payments is the financial product most people use every day, and the use of electronic payments therefore generates incredible data insights. Open banking unlocks the potential of this data, and by letting consumers choose who to share it with. Open banking is an opportunity Amex plans to use both in the AISP and the PISP space. It has great potential use cases and brings more transparency to the benefits users get from a particular payment product. It will help people better use their financial assets. For example, when customers are choosing a card to carry, they will now be able to potentially share their last 12 months worth of financial data to see which card is best suited to them. This kind of consumer empowerment will bring a new era of transparency. Is that card that sounds so good actually so good? Is that card with the upfront fee actually worth it? And will card providers be held responsible to what they're promising the consumer they will offer? While card providers might do this, we could also see consumer groups and others also offering such services. And as Amex tends to have a relatively transparent business model, both consumers and merchants know what they get. We see more transparency only as a good thing. However, just because you can share data doesn't mean you should, right? There's a real risk of data breaches from third-party providers having business models which don't necessarily align with customer interests. While the risk of data breaches by these third parties is clear, and I'd argue certainly as legitimate a concern, there are wider questions about how some of these businesses may choose to make money, actually. And one quite scary example I heard was that the what-if scenario of a third-party provider getting user payment data with full consent, and in return for giving those consumers insights and maybe even bonuses, so incentivizing them to share their data. But in the background, that data would be shared in real time with payment information with hedge funds or other actors to take market positions, like, for example, shorting a retailer that the data indicates is seeing less spending that quarter. So EU rules on data protection and the close scrutiny I'm sure all EU regulators will have on TPPs makes that scenario hopefully very difficult to see become reality. However, we need to be aware that this data we have opened up is very powerful, and someone somewhere is likely to try and misuse it. Trust will be key, and we've heard this previously quite a few times, and brands with trust will succeed, so we feel quite confident in that area. However, the whole industry will be judged by our worst actors, and a problem or breach with one TPP may risk trust in all of us. The final customer demand I'd like to touch on today is generating more value for the user. Customers want more from payments than just moving money from A to B, and we've heard a lot of creative ideas and also things that have been put into practice already today. Moving money quicker, safer, and more easily than anyone else is not enough anymore. Merchants want more servicing, businesses want working capital and supplier payment support, and consumers want unique experiences. At Amex, we feel, and that is where it's probably good to be over 160 years old and have a bit of experience, we feel well positioned given our unique model and our long tradition of service and having to prove our value, as we are very conscious that we're always a choice. So what do we expect to see as resulting industry trends from all this change? First of all, and that is also a recurring theme through the day, more collaboration. Innovation comes from competition, but collaboration is just as essential, and we heard, as I said, a lot about that today. We see acquirers, fintechs, and players outside the financial industry working closer together, and we see this only as a good trend that we're participating in. Amex Ventures is investing heavily, and you might have seen with our latest acquisition, Resi, that we have acquired our CRM and reservation platform to bring more value to our card members. Secondly, the change will result in more choice. But my question, as the technological barriers to entry are coming down, are the regulatory ones. Amex is always a choice. We're used to having to prove our value. We therefore fundamentally want there to be more choice for consumers and merchants, as we believe in such an environment and we're all placed to succeed in that. EU payments regulation has had great objectives, but has not necessarily delivered on all of them. For example, Amex was forced to exit its licensing business across the EU, as rules designed for the dominant players were applied to us. This limited competition rather than increased it, and we're hopeful that the impact of open banking might reverse some of that, but it might not be enough. Even small rules can be a barrier. Surcharging has now been banned on the dominant players in Germany, linked to the fact that the portion of their fees, but importantly not all of them, are capped by EU regulation. And this has essentially meant that consumers have been guaranteed a consistent consumer experience for the dominant products. However, they face of having a surprise fee added at checkout every time they want to use an alternative, whether that's Amex, whether that's PayPal, or any other new innovative payment type that some fintech in the audience are trying to develop. 85% of German consumers dislike the practice, 82% find it unfair, and 75% want a full ban on it across Europe, and we see that happening in some of the neighboring European countries. If we want to drive innovation and choice, we should hear those concerns and act to change this, and other rules that make it harder for alternatives to enter the German market and grow. Innovation comes from competition. Going forward, the German payment industry and the German policymakers will need to take the lead to ensure the next round of payments genuinely brings benefit for German merchants, citizens, and businesses. And that means using regulation to encourage new models and supporting the growth of alternatives to the dominant four-party schemes. I've been very impressed by BaFin, the Ministry of Finance, and the wider industry's commitment to improving the environment here in Germany and to ensure we will be a leader in this new wave of technologies. Payments touches everyone, and Germany becoming a leader in this field will improve the lives of our citizens, make our companies more profitable, and very importantly, it will make it much easier for me to shop with my kids. Thank you very much.